Good morning, everybody. Here we go again. So let's have a look at Forex pairs. Boring way to start the day, and then we'll move on to Bitcoin. But again, this is the nature of the beast for me at the moment. This is what it's all about, and it has been this way, I think, for a couple of months at least, probably 3 months. Anyway, just to let you know, a little disclaimer: my 2-year-old's in the back playing her tablet. We wouldn't normally do this at 10 to 9, but it's the only way I can get anything done. All right. So if you hear any weird noises or strange requests, then just excuse me while I turn around and observe, like, I don't know, a monster that she's drawn. Right, let's carry on then. Let's get straight into it. So far, we closed yesterday in the red for the euro, so we did get that rejection from the trend line, and we had a little spike up, fair enough, and then we pulled back down, and closed with basically just over a full percent down. It wasn't exactly as expected, but it was the most likely scenario that we were referring to. So pushing up to the Bollinger Band top, below all major moving averages, rejections the previous day. Tried it again yesterday, found us almost an exact double top and then a steep rejection. Markets came down with that. I don't know if you noticed that, but they did. Crypto didn't really, but markets definitely did. If you have a look at indices, stocks, they were all tumbling yesterday as a result of this. Now, it might just be pure coincidence, or there might be some kind of correlation behind it. Now, remember, I always say this about crypto, or I've been saying it throughout the majority of this bear market, given the fact that it's accentuated by the pulling of liquidity from the system, with rate hikes and whatnot. The correlation is quite high between crypto, Bitcoin, and traditional markets, but there is often a delay. We saw this on the very first everything bounce that we traded. Everything started moving, and crypto took about two or 3 days, 2.5 days to start moving. Same thing happened with the everything bounce 2.0. Everything started moving. Crypto then started moving about 2 days after that. So we see this pullback now on the euro. We saw the pullback on stocks. I still think that there's a good chance that we're going to see a pullback on crypto, but it's not the end of the world at the moment. It certainly isn't the end of the world, because as far as this chart is concerned, this is a daily. We had a golden cross on the exponentials, on the simples. We're crossing at the moment, and it's very common to see a retest of these in a trending move, to which this has been a trending move. We've been in an uptrend since we reached this bottom around 26th of September. We're now the 6th of January. So we've been trending up for 3 months. It's only fair for it to have a deeper retest of some of these lower zones. And when I say deeper, I'm only talking a little bit further down, but it's still required to come down by another, maybe 1%, maybe another 2% at best. Breaking down below there, again, I sound like a broken record, would be a problem. So for the moment, it's not a problem. For the moment, it does offer a buy the dip opportunity as and when we get there, and not on the actual moment that we get there, because we don't know if it's going to hold. We want to see a reaction. We want to see a response. We want to see a strong response, and that strong response should hopefully take us up a little further. But for the moment, it's still pretty much a wait and see, watch and wait. I would expect today to see maybe a little further move down and then close in the green. And that's what I'd expect to see for stocks. And I'll probably transfer that over to crypto. Now, that's just the euro. There is a bigger story at play, which is our Japanese yen. So if we see this, I'll get rid of this because I made that Forex video yesterday. So we've actually come straight up to the top of this channel, more or less. So this is the opposite. We're looking at a dollar strength here. So this is dollar to yen rather than euro to dollar. So we're looking at a trending move to go up here rather than a euro to go down. And we got that yesterday. And look, down to the top, down to the top. Now, this is a descending channel with bullish divergence on a daily. So there is a strong chance that we do break out. Maybe not this time, maybe the next time. But if it is this time, we've got this resistance up here at 142. That's a pretty big move if we were to break out from here. And that's a move of about almost 6%. And this chart does look very much like the Dixie's chart. And again, this is something I was trying to show everyone yesterday, a turn off all this noise, just so we can see the channel. This is a weekly, by the way. We can put it to a daily just so we can see how close the charts actually are. So down to the top, down to the top, and then we crept out. It's more of a creeping out than a breaking out, but we did creep out. No bullish divergence on this, though, I have to say. So this is why I think that looking at individual currency pairs is more useful than actually looking at the Dixie itself. And we've got conflicting information with both of these. This looks like it wants to do a breakout by 6%. This looks like it wants to do a pullback to maybe 2%. So that would reflect on the Dixie. And if we think about merging the 2 and the 6, we get I'm just. I'll get it working for you in a minute. I'm almost finished, baby. Sorry about this. Not very professional. So if we think about merging the 6 and the 2 together, especially with the size of the euro being much bigger component to the Dixie than the Japanese yen, which is still obviously quite a large portion of the Dixie, but the euro is an enormous component. So we're looking at a breakout to the tune of another 2.5% from here, give or take, and then maybe we get a rejection around there. If we turn on all our noise, for instance, which we can do, there is a chance that we get rejected from here on the first point, on the first pass, 200 exponential. We've also got we've also got a death cross when it comes to simple moving averages. So it's not looking great for enormous continuation, although I do favor a bullish breakout for the dollar. So I'm not looking for new highs on the dollar, although that is possible. I'm not looking for new highs on the dollar. I'm looking for a bounce on the dollar, maybe a significant one, depending on which currency, especially for the yen. So I think the yen's going to come down to a large extent. Right, so now you're all bored to death. Let me know if you've made it to the crypto part of this this video. Again, comments are welcome, even if you slag me off. I don't mind. I don't. The algorithm doesn't. I don't think the algorithm cares if you're full of love or hate. They just like to see that you've liked and commented around this. Right, so. This actually doesn't look too bad. Oh no, I'm looking at Algorand. Excuse me. It's such a terrible working environment here with this. I don't know if you can hear it. I tried to set my mic so you couldn't pick any of it up. Right. So actually, it doesn't look too bad on the 4-hourly for Bitcoin getting picked up so far, so good on the 21 exponential. Not the strongest place to get picked up from. We've still got the pump signal technically in play, which could basically bring us back up to just the lower. So the upper 16,000, so 16,900. Again, not massively convinced that that's going to happen, given the fact that we're just consolidating, and with the euro and the yen still threatening further downside. So this is just a chart, really. It's not the biggest picture you've ever seen. It's like looking through the keyhole at what's going to happen, really. But yeah, all momentum oscillators do point to just a general consolidation here on the 4-hourly. If you really wanted to do something along these lines, you could emphasize that we're at support right now, being 16,800. That would be good to see that support hold. And if the euro and the yen and the dollar all behave themselves, I think we do probably run up from here, to be honest. I think we probably do run up from here. And given the fact that stocks did tumble yesterday quite dramatically in the American markets, they might start to get picked up today. Just because some of those stocks really did fall quite dramatically. I saw Coinbase was down about 8, maybe even 10%, I think, on its close. So there was a lot of pain in the markets at the later stages of the UK trading session, but the American Open. So that sometimes we'll see a bit of continuation in the pre-market and then maybe get picked up towards the end of the day. So we'll have to keep our eyes on all of that. And again, it's the currency markets for me which are going to determine the overall health of any of these charts, really, which is why I wasn't at all surprised to see traditional markets and stocks come down yesterday with that 1% on the euro, just a 1% pullback on the euro. It didn't surprise me at all. So, yeah, hopium at this exact moment, sitting around just around 16,800, a little lower than that. Hopium there with the pump signal still in play, consolidating still as far as the momentum's concerned. Let's take it to a 1-hourly just to see if there is any signs of life on this 1-hourly. Not really, to be honest with you. Not really. There's not really any signs of life. So this doesn't bode well for that support. We could push back down to, yeah, so it's all about the 16,700 to 800 zone, really. Breaking down from there, we'll have to take it to a higher term time frame, not a 3-day, but a daily to see how that looks. So it's encouraging to see, to be honest with you, because we do have the bull dip on the RSI. We've obviously got it on the money flow index, and the MACD is not majorly bullish or anything like that, but the histograms continue to tick up as the moving averages diverge still. If we cross over the 0 point, it could offer a breakout to us that could take us into the mid 19,000s, which is basically, well, not the lower 19,000s. So it's still a reasonably decent move. Again, the pump signal on the 4-hourly might not be enough to take us up to that level. We might only reach back into the 18,000s, to be honest with you, which is where this major box of significance, which previously was, pretty decent support, right up until FTX took us down into the depths of despair. to new lows. Yeah, so there's targets above us sitting around 18,000. So there is reason to believe that we could make it up there. We have reclaimed some moving averages recently, the 10 and the 21 on the daily and obviously on the 4-hourly. So it's not all bad. But the bigger picture, it does sit in the Forex section, and like I say, the representation of the impact that that has was reflected on stocks yesterday. So maybe this is the Friday where we just get picked up. We have a little rally towards the end. Maybe we close even, we break even. We'll have to just wait and see what happens when the American markets getting closer to American markets opening. You can have a look at pre-markets. They can be quite useful sometimes, but most of the time, I would focus on the actual open, which will be 2:30, I believe. Still, I'm not sure now. But anyway, we'll keep our eyes on the price. Right, thank you for watching. I hope you have a nice day. Take it easy.